Welcome to this update from CABA Capital. Our funds have had impressive returns so far this year, but in October we are reporting negative monthly returns across our range of funds. The two maturity funds, CABA Flex and CABA Flex 2, are down 0.5% and 3.7% respectively in October. The evergreen fund, CABA Hedge, is down 1.3%. The main challenge in performance was driven by a widening of the yield spread between covered bonds and government bonds. While this may have a negative impact in the short term, the increase in the spread leads to a higher expected return for all three funds in the long run. For a more detailed explanation, please feel free to contact us directly. I would like to focus on our newest fund, CABA Flex 2, and explain some of the dynamics in the fund. Investors in this fund have gained almost 5% in net return since launch in mid-June this year. The risk in the fund has already declined by more than 10% because of the accrued positive performance in the fund and the declining risk profiles of the underlying bonds. We estimate an accumulated return after all costs of a little more than 20% over the remaining 2.6 years of the fund's lifespan. This corresponds to a net return of approximately 7% per annum. Even though this is a maturity fund that expires in June 2027, investors can buy and sell the fund every day. As we enter November, the widening of the yield spread has led to an increased expected return of approximately 1% per annum for CABA Flex 2. Additionally, the risk associated with the underlying bonds has decreased because of their maturity profile. And thus, the risk-reward profile of CABA Flex 2 improved during October, and therefore we believe that this current setback represents an attractive entry point for CABA Flex 2. The fund is open to new investors and you are welcome to reach out to us. Please find our contact details on our website cabacapital.dk.